Welcome to CEO Money. I'm Michael Yorba. Thanks for joining with us. I have Cole Davis, COO of StartSTO, on the show with me today. Cole, welcome to the show.
Thank you very much for having me.
All right, now you're a crypto financial engineer. What does that mean?
So a crypto financial engineer is somebody who has a background with an MBA and also an engineering degree, and they're able to bring the fintech together. Most people just have a financial degree or an engineering degree, but they really can't blend the two backgrounds together and understand the two. So I'm able to bring my perspective, my background together and really tell you, this is a cryptocurrency. What is it actually being used for? Is it correct as a cryptocurrency? Should you invest as a cryptocurrency? Yes, no, maybe so. On the other side, there's the STO aspect of it. How do we take the digital asset and actually make it a financial asset? And that's what a crypto financial engineer does.
Now, for the viewing audience, the difference between a security token and a utility token, break that out for them.
Sure. A security token is literally secured to an actual asset. So it can be a business, a painting. It's something you expect a return on. Whereas a utility token is just secured by a project. It's not really secured by anything. So Bitcoin, for example, it gets its value based on the utility or the usage of the actual coin itself. So if everybody stops using Bitcoin, Bitcoin value drops. With a security token though, if people don't use the security token, they let it sit on their computer for, say, as a digital asset, the value can still grow because the company still grows as well. So that's the main difference between a security token and a utility token. And with the security tokens, they're also going to be regulated by the Securities and Exchange Commission as well.
All right, now why go with security tokens? Just for the upside value, or is there something more to it?
So security tokens are much safer because they are going to be regulated by the Securities and Exchange Commission. Plus, right now, there's secondary exchanges being built out. So if you want to invest in a security token, whichever company is offering a security token can offer on a secondary exchange to list their security token. And so an accredited investor has that liquidity now with other accredited investors on that secondary exchange, whereas before they did not.
What kind of companies can StartSTO help?
So StartSTO can help all kinds of companies. We can help small companies, big companies. We can help radio stations. We have a pizza franchise that we're helping out. There's also a furnace franchise that we're helping out. If you're a radio station, we can help out that way. So anybody who wants to raise money through equities or debt, StartSTO can help.
All right. What is a pre-STO?
So the pre-STO is really the private placement phase. It's really where we're trying to get the money and start an actual security token offering. So we'll go out to your friends, family, network, our accredited investors and raise money through private placement. And then we'll offer those accredited investors, friends or family security tokens before you actually go public. And when you go public, it's a much bigger deal because you have to go through underwriting and everything. So it's much more expensive. So with the pre-STO, we're trying to raise funds so you can go up full STO is what we call it in our company.
Give me a ballpark on what the size of that raise looks like.
So the size of the private placement raise or the pre-STO can be anywhere from $10,000, $50,000 up to, say, $1 million. So for the $1 million raise, you can use your friends, your family. They don't have to be an accredited investor. If you want to go past $1 million, you have to be a 506c company. And then we have to go directly to accredited investors, but we can advertise to accredited investors. So the size of the raise varies depending on what the company needs are, and we can match that.
All right. Now, for the audience, break this out. Venture capital fund for digital assets. You want to bring that up, open that up for us.
Yeah, so what my partner Nathan and I are working on at StartSTO is we're going to start a venture capital fund, but it's only going to invest in digital assets. So in other words, we're only going to invest in security tokens. So if you have a company out there that wants to be tokenized, this venture capital fund is more likely to invest in your your company.
Now, there's a lot of companies out there that have tried to do an ICO. They somehow have been able to get it together and have a utility token. Just off the cuff here, how difficult is it to take the current investor base that they have in their current utility token and then turn it into an investor base for a STO for them?
So that's a very interesting question. When they offer it as a utility token, what they're trying to do is they're trying to get away from the Security and Exchange rules.
Which you can't.
Which you can't now, in the Security and Exchange Commission has come down really hard on a lot of ICOs. In fact, ICOs have gone to the wayside almost now because 90% of them have been proven fraudulent, or the Security and Exchange Commission is saying, no, you know what, you just broke our rules because you actually are a security offering. So the difference in turning those into the utility tokens into a security token is a matter of the paperwork and how the company is structured. So it's going to be really hard because you just sold somebody a utility token, but really it's a security token. And there's a lot of different rules when the Security Exchange considers it a security, not a utility.
So you've got to dissolve, send them funds back, and then start over again. But at least you have a database to start with.
That's correct, yes.
Okay, all right. I got a feeling that that's probably going to be something that could be happening more often than not, unless all the money's already been spent. And then, you've got to deal with all the people saying, well, what happened to the money I gave you last time?
Yeah, and part of the problem with the utility tokens is you have a lot of these ICOs that are raising money, and they're raising it through an ICO, but it's going to be used to build solar panels on top of a school somewhere or in a foreign country. And that's not really what a utility token was meant for. It was meant to be a completely digital blockchain project. But what they're doing is they're riding the wave, and they're violating a bunch of rules they shouldn't be.
Okay, great. You got your ear to the ground on the pulse of what's going on. I've got other companies that are now starting to talk more and more about this. You are a pioneer in this industry sector. Cole, I'd like to invite you back on the show so that we can talk about the intricacies and the pitfalls that people need to watch out for as this part of the digital economy grows. Would you be all right with that?
Oh, that'd be wonderful. I'd love to come back on the show. It's excellent.
Good. I'm glad you showed up today. Thanks for being here.
No problem. Thank you very much.
You're welcome. You've been watching CEO Money with Michael Yorba. Thanks for joining with us. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.